this is Jordan at Pure Elliott Wave here with a free Australian dollar analysis for you today. And if you like what you see here, you can go ahead and visit the website to view the full report, which is quite extensive, quite long. It's about 10 charts, a few paragraphs of text as well. And then at the top of our website up here, you can see the other free analyses we have. Then you can also subscribe to some of our premium content if you'd like. We have weekly update videos on the S&P 500, Bitcoin, oil, and gold that are, also the euro as well, that are not published on YouTube. And then we have daily updates for the euro and the S&P 500 with the gold market coming shortly. All right, let's jump into the Australian dollar. Overall, we're expecting a ginormous bull market for the long term that will complete super cycle D in this triangle. And we don't expect price to go above 1.10787, which is above this super cycle B wave here. Our target for that longer term bull market is 104.438. And for the short term, we expect some downward movement in this A, B, and then we're currently in the C wave, and we're in 1 and 2, a little bit further down. And we don't expect that price to fall below 0.61705. Overall, I believe the technicals do support this wave count, and I'll show you that in just a moment. So let's jump into the quarterly chart. The quarterly chart with each candlestick representing 3 months, and the majority of the wave count is based off of this ginormous B wave here, which very obviously to me looks like a zigzag with the overlap between here and here, here and here, here and this corrective structure here. So obviously in my mind this is a zigzag wave here, so we have to reconcile the rest of the waves, the A wave and the C wave. This did not make a new low below the end of A, and also it had a 1, 2, 3, 4, 5, 6, 7 wave structure, leading me to believe it was a corrective structure because motive structures have a 5-wave structure. And super cycle A also had a 3-wave structure. So because of those reasons, I've labeled it as an A, B, C, and then D running contracting triangle where B moves beyond the start of A. Supercycle C looks to be complete as a double zigzag, especially defending the lows in the past 3 years. And this ginormous spike bottom is often a sign of a long-term bottom, as we can see in the past. Within a running contracting triangle, the C, D, and E waves often retrace around the same percentage-wise. So with C retracing 88% of B, we have a target for supercycle D to also retrace at 88%, giving us a 1.04438 target. And that might seem far-fetched with the prices we have now, but if we do an extension from cycle A off of cycle B, that also gives us a Fibonacci 1.618 extension for C to reach 1.02, which would be right about here. So that number really isn't as far-fetched as it might seem at this point. On the monthly chart, let's zoom in from the top of supercycle B on this price action here. Now here is the top of supercycle B, here is C, and going up into D. Supercycle C is a double zigzag with the A, B, C for W, a sideways W, X, Y for X, and then an A, B, C for Y. I also believe this is the best count for this wave because this overlapping right here is extremely hard to count as an impulse from here to here, and it does not fit well as a diagonal. So this wave here, ABC, fits much better as a zigzag versus an impulse. Within a triangle, each leg must be a zigzag or zigzag combination. So we have a zigzag A, B, C at cycle degree for supercycle wave D, with A and B likely complete. We've drawn an Elliott wave channel around this price action, which starts from the beginning of A, goes to the end of B. Parallel copy is drawn along A, so could see some support to the downside for primary wave 2. The invalidation below would be a breach of multiple channels, this Elliott channel, this triangle channel back from the start of the Australian US dollar's history, and below supercycle C, that would be our invalidation at 0.55098, because within a zigzag the B wave may not go beyond the start of A. On the weekly chart, we'll zoom in to the top of cycle wave A and view this price action here. On the weekly chart, you can see the top of cycle wave A here and going down into B as a corrective structure. And since the bottom here, we've had a very clean impulse for the start of C, which must subdivide as a motive structure, impulse for 1, and going down into primary wave 2. Cycle B subdividing as a double zigzag, A, B, C, W, A, B, C, X, and A, B, C for Y. Primary 1 subdividing as an impulse, 1, 2, 3, 4, 5, with 3 being the longest, sharpest wave, and primary 2 as a very, very clean zigzag. This is a really clean A, impulse, B, correction, and so far we've had a really clean impulse to the downside. Invalidation for this impulsive structure sits at 0.61705, and that's where wave 2 cannot move beyond the start of wave 1. Intermediate C within primary 2 is not yet complete. We have a few unresolved waves to the downside, so we're expecting more downward movement. And we do have support below from the Elliott wave channel, and then we have a new Elliott wave channel shown in black, which is drawn around A, B, C. This could act as support for C. C commonly finds support along the lower edge of this channel. You can see I've added that other target previously mentioned where C would reach the 1.618 extension of cycle A. So the length of cycle A from the bottom of B, you multiply that length by 1.618, and that gives us the 1.02106, giving us the range. If we combine the numbers, which seems very unlikely from this price point now to move that far, but you'll be surprised what markets can do. As you saw in Super Cycle B, that was just an explosive move to the upside. On the daily chart, we're going to take off from the top of primary 1, and we'll look at this ABC structure in a little bit better detail. Here we have the top of primary 1, the ABC structure for primary 2. Intermediate A subdividing minor 1, 2, 3, 4, 5. Very clean impulse. Intermediate B subdividing as an A, B, C flat. And then intermediate C subdividing 1, 2, 1, 2. And this is a extension to the downside where the smaller degree waves appear larger in size and get spread out. So within this third wave, that is subdividing 1, 2, 3, 4, 5 for the third wave, yet to be complete. And that's why we think, because of the overlapping here between this wave and this wave, the extension still has yet to be complete downwards, which is why we're expecting downwards momentum, or we resume the major bull market with the third wave upwards. If we see price move above 0.66050, that would likely tell us that the C wave is complete and that the bull market would be enforced. That would also breach the Elliott channel as well. Downside target for the shorter term is for C to reach equality with A, and that would happen at 0.62253. So decently close to our invalidation, but it's not uncommon for these second waves within a new impulse to retrace 80, 90, up to 99% of that wave. I'm expecting more downward movement that is supported by the technical charts as well, which we'll get into now. This is a monthly volume chart for the Australian dollar. You'll see a theme on these volume charts. It seems like on-balance volume is showing a strong range on every one of these from the monthly, weekly, and the daily. So that leads me to believe if we did break these ranges, we could see some explosive moves for the monthly, probably be in the next year or two if we did break out of this according to the Elliott wave count. Volume overall is decreasing after the increasing pullback, so less volume is moving prices lower. And Money flow is currently neutral. On the monthly technical chart, we're trading below resistance at 0.7150 and above support at 0.6200. Trading below both the 1 and the 2-year moving averages. And while this was not a bearish engulfing because it did not engulf the top of the candle, it is a very strong bearish candlestick. ADX indicates no trend, RSI is neutral, stochastics are neutral, and ATR is increasing with the bear trend. Our model, when ATR indicates no trend, we wait for stochastics to reach oversold or support to be hit. So according to our model, it could have downward price movement continue until we reach support or stochastics oversold. This agrees with the Elliott wave count. So I wanted to see if there's any correlation between the Australian dollar and the US dollar index. On the quarterly and the monthly, it appears there's a slight negative correlation, which over the long-term trend fits well with what we're expecting for the dollar and the euro, which have a negative correlation with this. But once we get down to the weekly or in times of volatility and tops, there is no correlation. So I would say there's no reliable correlation on the monthly. However, with the large term trend, there's a little bit of negative correlation, which fits well with the charts we also have for the dollar index. This is the weekly volume data for the Australian dollar. You can see we've had a gradual decrease, which was increasing volume, and now since then we've had a decrease on our new downward trend. So a good indicator of a second wave with possible third wave to come. Money flow showed bearish divergence between this and this high, with money flow making lower highs as price made higher highs. You can see that resulted in a trend change, and currently we are having double bullish divergence between this low and these lows, and then this high and these highs for pivots on money flow. That is a bullish signal. Here you can see on balance volume, we're currently trading within this tight range, which is very significant due to the amount of tests this range has had, and these lines are pretty horizontal, which adds to their significance. So when we see a break out of this range, could be a trend reversal. You can see when this range was broken to the downside, back here it did yield a small downside move. And then when this orange line was broken upwards, it yielded higher prices. For the weekly technicals, you could see our support below, as previously mentioned, at 0.6200, resistance above 0.7150. We had a bullish engulfing candlestick here, which hasn't given us any bullish price action, but if we saw another reversal pattern down here, that could be a bullish sign. ADX currently indicating no clear trend. If this line was rising and it reached above 15, currently at 12.59, then we would have the early stages of a bear trend on our hands. RSI is neutral. Stochastics are oversold. However, they can remain oversold for a while during these downward trends. ATR is declining with bearish price movement indicating volatility could be limited to the downside, and correlation between the Australian dollar and the US dollar is whipsawing up and down from the zero, showing no reliable correlation. On the daily chart here, we have flat decreasing recent volume with the bearish trend, and then we also have some bullish divergence between this bottom and this pivot here, and that is a bullish sign from money flow. On balance volume, you can see we are range bound between these two lines right here, so a breach of that should be noted moving forward. On the daily technicals, you can see we have some shorter term resistance above here and here, so a lot of upward resistance, and the next support below was at 0.6200, so quite a ways off on the daily chart. Moving averages are fully bearish, all sloping down, with the mid below the long and the short below the mid. ADX is indicating a bear trend, however this could go much further before it reaches extreme. RSI is still neutral, stochastics are oversold, ATR is declining with consolidating and falling prices. I think the technicals here definitely support the Elliott wave count that the bear trend has a little bit longer to go before we resume the major long-term bullish trend. So I hope you guys enjoyed the analysis today, and I hope everyone has a good rest of their week.